Welcome back. You're still tuned into Trading Hour, and we have the last few days of the earnings coming through. So let's talk about V-Mart Retail. The company delivered a weak performance in the second quarter. If you look at it on a sequential basis, on a year-over-year basis, of course, it looks quite strong because of the low base. Now, the retailer did add around 16 stores during the quarter, and the same-store sales growth has come in at around 10%. Anand Agarwal, who's CFO of V-Mart Retail, joins us now to discuss the quarter gone by as well as what we can expect going forward. Anand, good morning and thanks a lot for joining us. This is Pavitra. First I want to ask you on your margins, which have seen a contraction to around 11%. Do you think the worst of this is done and it will only trend higher from here, or are you still facing more, price-related challenges which are hitting the margin?
Well, thank you, Pavitra. I think the margins have actually improved year on year, and they have actually also improved from pre-COVID levels at around 11% in quarter two. Typically, quarter two is not a very strong quarter, owing to the weakness around EOSS or end of season sales, which we are not very strong in. We are a honest price, full price fashion value retailer. And typically our sales peak during quarter one and quarter three. Quarter two remains slightly weak. Despite that, the margins have actually been improving, from 3% pre-COVID levels to around 6% last year to around 11% this year.
Will we be back to 15 next quarter then?
Yes, definitely. Okay. Quarter three should be much better. And quarter three historically is a very strong quarter for a retailer like us.
Okay, it's a strong quarter, quarter four. Can you tell us what is the same-store sales growth outlook for the full year, right? Because, I mean, adjusted to all of this, the weakness in the quarter, etc., what are you looking at by the end of the year? And for FY24, any guidance?
Not really a guidance, but definitely if I look at the overall performance, versus last year, the same-store sales growth will definitely be in a positive territory. It should be around 10% plus. But given the fact that last year was still impacted by a bit of COVID, internally we do compare ourselves with pre-COVID levels, and thereby we are seeing still some contraction or not at full level performance versus pre-COVID levels. But if I look at versus last year, definitely we should be in the positive territory, upwards of 10% for the full year.
What's the gap between the growth rates compared to pre-COVID levels?
So actually, at a total level, our sales has increased by around 50% year on year, and versus pre-COVID levels, it has increased by 61%. But this also includes a small addition in base of the new unlimited stores that we acquired in South India in last year. So that adds to the overall kitty, and thereby a small difference in the overall top line growth. But as on a like-to-like basis, the growth still is at 10% on a company level.
Okay, we will end on that note. Thanks a lot for joining in and all the best. By the way, the market is absolutely quiet. Nothing much has happened in the last 1 hour, except